Hey, welcome to Sports and Politics with T. I'm your host, Tanya, and tonight we have made it back to Monday. Guys, I hope everybody's had a great weekend. It is good to just be back. And guess what? We're going to have a great show tonight. Tonight, we're going to talk about the economy and just kind of get some information on as far as where we stand as of right now. Now, we all know that the economy can change, and we know that it's still early in the year. And so we do have to give time, for things to change. However, we are looking at some critical factors. We're going to talk about the housing market, the rental market, and also how stocks and things like that are performing as of right now based on the tariffs that are coming into play, because that's going to be a huge factor as far as how this economy is going to either excel or not excel. Okay. But anyway, I hope everybody's had a great weekend. We had a great time again on Friday night, last Friday and Saturday. Had a wonderful time. All the comments, all the shout outs. I appreciate everybody just chiming in. So I just want to say again, thank you for everybody just going in on the live and just saying hello. Trust me, all that interaction helps a lot, and I definitely appreciate it all, okay? But the first thing that we're going to talk about tonight is we're going to talk about how people are perceiving Trump. His approval ratings, let's just say, he's not doing as good as he think he is. I know he keeps talking about that he's doing a good job and this and that and the third, but let's listen in on this article from MSNBC, and we're going to get some information as far as what they have found, and then we're going to dissect the video and I'll let you know exactly how I feel about where I feel like he is as of today.
Now, just a little bit fed up with Donald Trump and his actions. I'm going to bet you want Democrats to do something about it. Now, if that sounds like you, and I'm just guessing here, you're not alone. Just right now, some new polling out from NBC News shows that 54% of voters disapprove of Trump's handling of the economy. That's the worst number he's ever seen, dating back to his first term. And a whopping 82% of voters say the state of the economy is either fair or poor. So basically, most people aren't happy. But what do they want to do about it? That's always the question. Well, the poll also found that the majority of Democrats want their leaders to wake the hell up and fight back. Just 32% of Democrats say they want their members of Congress to make compromises with Trump, while 65% say they want leaders to stick to their positions, even if it means not being able to get things done in Washington. Now, that's important to note. Why? Because it's the total opposite of where those numbers stood back in 2017. Because guess what, Toto? We're not in 2017 anymore. Things have changed, but unfortunately, not every Democratic leader seems to have gotten that message. We saw that this week when Chuck Schumer and 9 other Democrats voted with Republicans to advance a continuing resolution that keeps the government open through September. Schumer says a government shutdown would have been a worse option. Really? You really think that? I mean, how much worse could it get? They're already closing down agencies and firing people. So worse? At the end of the day, no matter what reason he may give, Schumer backed down from the fight. That's the bottom line. This wasn't about what happens on the other side of the shutdown. It was the fight regarding the shutdown. He waved the white flag. He handed Trump a win. And Democrats are pissed. Just listen to this response from House Democratic leader Hakeem Jeffries on Friday.
Is it time for new leadership in the Senate?
Next question.
Have you lost confidence in him, the fact that you guys see this so differently?
Next question.
A bit of a sidestep, but then again, folks, not really. Schumer's former leadership partner, Nancy Pelosi, also took a swipe, saying Quote, this false choice that some are buying instead of fighting is unacceptable. AOC, Alexandria Ocasio-Cortez, also went after Schumer, saying there is a deep sense of outrage and betrayal and calling this a huge slap in the face. And whispers of a primary challenge or leadership challenge, as a matter of fact, are getting louder. So, folks, here is the deal. Bear with me for a second. I think I'm having a bit of a deja vu. I don't know about you. The year is 2009. Democrats are at the peak of their powers. Republicans are in retreat, in a tailspin, confused and not knowing what to do. There are signs of voter backlash everywhere. The transformative agenda that's being pursued in Washington is not being accepted by the people on the ground. Sound familiar? We saw that backlash in the polls. We saw it at town halls. And we saw it in Congress. Sounding even more familiar? Back then, Republicans rode that wave of resistance to a historic midterm landslide. I know a little bit about that. So today, the question for Democrats is this. Do they join the backlash, lean into the resistance, and fight for the frustrated voters, or do they keep waving the white flag?
Now, let me just chime in for just a second. Now, Chuck Schumer typically votes with Nancy Pelosi and AOC. They typically are all on the same team. But they're outraged with Chuck Schumer because he says that it would be worse to shut the government down. When in reality, I mean, what government? They there is nothing left at this point. I understand both sides. You don't want to shut it down because then people can't, the ones that are still working can't go to work, can't make no money, can't make a living. But at the same time, how are you going to make change if there's no press, if there's no fight? So that's where the issue is right now. And like I said, he typically sides with Nancy Pelosi. And I was actually a little surprised that he didn't do it this time. And that's why they're a little upset with him. But anyway, let's just keep going.
Joining me now is the host of the Bulwark podcast, Tim Miller, and special correspondent for Vanity Fair, Molly Jong-Fast. Okay, folks, this is a 1-2 punch on this subject, so I actually could just sit back and just let Tim riff and Molly, clean up on aisle 9 here. But I'll get a little bit specific with you, Tim. Trump said he appreciates Schumer and that he did the right thing. Does that tell you everything you need to know about this situation right now?
That does tell you everything you need to know. And my congressman down here, Troy Carter, is a Democrat from New Orleans, sent a picture that tells you everything you need to know, which was Schumer kind of like angrily pointing at Trump while Trump just smiled, right, from the Oval Office last week. And that's kind of where they were at. That's where people are at right now. Schumer folded. He made a little bit of a stink, but didn't actually get anything, didn't force Trump to the negotiating table. And you can bet Trump was smiling when he was sending that bleat. And if you're the Democratic leader in the Senate and you're making Trump smile like that and you're having him congratulate you, well, then you made some mistakes. Here's the thing, Michael. You were talking about that Tea Party wave in 2010. And I think about that because I was on the other side of this token back then, right? And there were times where I was, in the more establishment on the Republican side saying, come on, you Tea Party guys are going too far, all right? Like, this is too crazy. Like, you've pushed us too far to the brink with these government shutdown threats. And so I understand, like, the logic of that, right? That you're a Democratic senator and you think that the right thing to do is prevent a shutdown and be responsible and, understand the political limitations. But we're just not in that world anymore. And you have and the thing that those Tea Party candidates got right was that, as a politician, you have an obligation to be responsible, but you also have an obligation to represent the rage and the anger of the people that have put you there. And these Democratic senators and House members have a huge base of people behind them who are pissed, and they're right to be pissed because Donald Trump is tearing this government apart with Elon Musk, and he's doing it illegally, and he's firing people who don't deserve it, and he's hurting the stock market. And you got to, if you're a leader, you have to channel that anger, even if that means that there's going to be some bumps along the way, and there would have been some bumps if he would have fought it. So I just think it was a huge misread. And unfortunately, he did not learn the lessons that we learned living through 2010, Michael.
Yeah, no, I think that's exactly the framing here, Molly, because you have Schumer out there talking about a shutdown would be worse. And I'm looking around me, as I said in the opener, dude, you're already strip mining the federal government. You got, 60,000 people in one agency have been told don't come to work. I mean, so how much worse could it have been?
Working with a registered dietitian.
And see, that's the thing. He's gotten rid of so many positions. It's like, what is left? I mean, so, and see, this is coming from Michael Steele. Michael Steele actually was ahead of the Republican base at one time. The guy with the glasses, the black guy, I don't know if he's still Republican or not, but that was his party. So to hear him switch sides, now he's on MSNBC, which is more liberal, is kind of like, wow. Now that's different, because I would expect him to be on Fox News to say all this. But no, he's on MSNBC, like I said, which is all Democrat, all liberal. So, all right, but let's keep going.
Can be a game changer in achieving your goals. Here's what you unlock through Faye. Most clients.
Well, I think Tim has a really good point here, right? You're not royalty. You serve at the pleasure of the people who put you in that office, and it is your job as an elected leader to reflect that. And I'm sorry that it's inconvenient and that it makes people uncomfortable, but everywhere I go in New York, I keep seeing protests. I keep walking through protests. So obviously people are not happy. And the question is, I understand it makes a lot of these older members very uncomfortable, but it is their job to represent their constituents. And I think I always ask myself, what would a Mitch McConnell have done in this situation, right? Because I don't think Mitch McConnell would be like, you're right, I don't want to cause any damage, let's just keep going here, right? I just feel like that would not be what Mitch McConnell would have done, nor would a Harry Reid, Nancy Pelosi combo. I mean, we are here because we are not having the kind of leadership that reflects the party base. And again, Democrats have this problem. They run from their base, whereas Republicans are hostages to their base.
That brings a smile to my face when I'm sitting there thinking about how even when in the minority, Mitch McConnell still knew how to play the game and how to get the win. Tim, as we've seen him do so many times. So with respect to that, we had Hakeem Jeffries, the minority leader on our show with my colleagues Simone and Alicia on the weekend this morning, and asked him about Chuck Schumer. Let me just play a little bit of what he said.
We haven't had a conversation since that vote. I do expect to have a conversation with him at some point later on today. Look, Chuck and I disagreed as it relates to the approach and outcome relative to what we viewed as a reckless Republican spending bill. At the same period of time, Chuck and I agree on the overwhelming majority of issues moving forward, including our effort to oppose the largest potential Medicaid cut in American history.
So I followed up, Tim, with him on that and said, well, the tactics here are the thing. Yeah, you can all, say that Medicaid coverage in that fight is going to be important, but you thought he had your back on this one. What makes you think he's going to have your back on that one? I mean, what do you think, my friend?
Yeah, I mean, I think that the minority leader there, Hakeem Jeffries, is in a tough spot, right? Because it's not like Chuck Schumer is going to be overthrown next week, as much as at least some people might wish, and so he's going to have to work with him on this fight, on the next big fight, right? And I think that Hakeem is right. There will be fewer Democrats in the Senate. God willing, I hope zero. Who knows? Maybe Fetterman or maybe one or two would go along with the next bill, which will include the Medicaid cuts and the extension of the tax cuts. So I understand that he's going to feel like he's going to need to fight with Schumer on that, and so doesn't want to alienate him. But I think the same message I had for Schumer, I guess I kind of have for Jeffries, right? Again, like, part of this is the policy and the tactics. Part of this is channeling the rage. Part of this is doing politics, playing politics, giving people something to rally around, giving people a strong talking point on what you're going to fight for. And I think that that's an area where Jeffries can improve too. One last thing just on the Mitch McConnell thing. I was just laughing here listening to Molly, thinking about, can you imagine Barack Obama ever sending a tweet going, "Thank you to Mitch McConnell for folding, and I really appreciate you." And so you just have to recognize what world we're in and play the game by the rules that they're playing it by.
It's really remarkable.
All right, so you can see right there, like I said, people are not happy. You're hearing it from officials. You're hearing it from the news that his approval rating is not like he thinks, okay? I had a comment on my last video about, I think a guy, he said something about, this is early, and that, it took 4 years to create this mess, and people that think that things are supposed to just get better all of a sudden, that that's just, I guess he's trying to say that's just unrealistic, and which is true. However, the problem with that is Donald Trump ran on the promise. When he ran, he stated on day one, as a matter of fact, that I'm going to do this and I'm going to change this. Now, of course, we all knew he was lying. But it's the fact that he stated it with his own mouth. That he stated that I'm going to do all of this on day one. And guess what? He's doing really the complete opposite of what he said he was going to do. There was nothing in his campaign that said that he was going to slash all these jobs and do all this. None of that. Okay, and see, that's why people are horrified, because that's not what they put their vote in for. Now, I do agree, it does take time to clean up mess and stuff like that. However, if he had never said with his own mouth that he was going to do this on day one, then that's different. Okay, so have to push back on that comment a little bit. But anyway, let's move on to the next thing. We're going to talk about the housing crisis, because look, rent and mortgages are through the roof. That's another problem that we're having. Let's listen in on this article about how the landlords are now struggling to pay for these buildings that they created. Just watch this, and then we're going to address this video once it's complete.
150 square feet. A one-bedroom starts at $19.50. A two-bedroom starts at $32.50. And they thought that people would continue to pay these high rents that they did during the pandemic, but now they're not. In many cases, people in cities like Nashville are moving back to where they came from during the pandemic, leaving all these vacancies. And I'm here at another luxury property that's sitting completely vacant, everyone. And on this property, they're giving 3 months free rent. That's about a 25% rental discount on a 12-month lease. And I want to take a second to explain why this is such a big problem for these landlords. The rents are going down at a time when the cost of ownership for landlords is going up. So we know that the property taxes are going up, the insurance is going up, but really the big issue for these landlords is the wall of debt that's hitting the commercial property market right now. According to the Mortgage Bankers Association, 20% of all the outstanding commercial mortgage and multifamily debt is going to mature in 2025, which means that 20% of that debt is going to get refinanced at much higher interest and mortgage rates. When properties like this went under construction, they were taking out debt at 3% interest rates. Now the interest rates are 7%. So when they go to refinance, their cost of interest and debt service is going to double, and that's going to immediately put many of them underwater on their mortgage and unable to afford the payments. At the same time, the values of these multifamily properties are plummeting. According to Green Street, the average value of commercial real estate's gone down 18% from peak in 2022. There was a slight rebound in the value late last year when interest rates dropped, but now they've stopped recovering, and they might even go down again now that rates are staying higher for longer. And what's concerning everyone is that it's not only the lease-ups and the new properties that are giving away all this free rent. It's also the existing properties. So this one behind me here in Green Hills in Nashville, this property was delivered like 5 or 6 years ago. This property's been around for a while. It's a luxury property, and they charge around $3,500 a month for a 2-bedroom, around $2,300 a month for a 1-bedroom. So the rents are more expensive. However, yet they're still offering 2 months free rent 5 years after they opened. I mean, that's crazy, everyone. If you talk to anyone in the multifamily landlord or apartment space and you tell them you're going to be offering 2 months free rent 5 years after you buy or deliver your property, they're going to tell you, I wouldn't want to do that deal. Yet that's what we're seeing happen here in Nashville. And folks, now I'm going to take you around to different neighborhoods in Nashville and show you just how much the rents are dropping and give you a little tour of the city. I actually used to live in Nashville, so I know this area pretty well. And you're going to be shocked at just how much the rents are dropping. And one of the biggest things you need to understand out there is what concessions mean. Because concessions are happening all over Nashville and other cities across America in the apartment market. And what a concession is when the landlord, instead of cutting the rent on face value, instead they give free rent. So they give 1 month free rent, 2 months free rent, maybe 3 months free rent. In Nashville, a lot of the buildings are giving 3 months free rent. In fact, some are even giving 4 months free rent. And I want you guys to think about that. So 4 months free rent on a 12-month lease is equivalent to a 33% net discount in rent. A 3-month concession is equivalent to a 25% net discount. And in some cases, they're having to do crazy stuff, like they're throwing in electric scooters, they're throwing in gift cards. And the reason they're getting so desperate is because many of these landlords are on the verge of having to refinance their mortgage. There's a massive maturity wall in the commercial real estate industry right now, and particularly in multifamily, where there's a lot of debt coming due. And they're trying to get what's called heads in beds, because the lenders out there would rather just see some level of occupancy, even if the net rent is lower. And it's causing basically a bloodbath in the Nashville apartment market. It's causing a bloodbath in the Austin, Texas apartment.
So I wanted to kind of chime in for a second. The housing market is, in a way, it's a good thing that they're discounting the rent for people to, move in. But on the landlord side, they're hurting. They're hurting really bad. So I'm kind of glad that they are giving those 3-4 month discounts for people, because I mean, it's ridiculous. $2,200 and $2,500 and some of these luxury apartments aren't luxury apartments. Now, I'll be honest with you, that's another thing. Luckily I'm a homeowner, so I've rented a long time ago. But at the same time, when they say luxury apartments, some of these are not in the best areas, and some of these are not considered luxury at all. Okay. Now I'm in banking, so I understand what he's saying as far as the maturity date. And, after that maturity date, either that loan has to be paid off or they're going to have to refinance it. And guess what? When they bought the building, the interest rates were really low. But since then, the rates have not skyrocketed, but they've increased a lot more. So that means that they're going to be on a higher rate, which means a higher payment, which means they're probably going to have to raise everybody's rent. So the only downside to it is they're getting people to move in for those 2 or 3 months. And people are going to think, oh, okay, this is what my rent is going to be. And then what's going to happen, they're probably, once they get into that renewal, once they get to the part where they're about to renew their lease, guess what? After those 8-9 months, they're going to increase the rent to make up for that rate increase that they had to do. So it's to me, it's a temporary situation really for both parties. You know, you're getting a little bit of relief from the person that's moving in because they don't have to pay rent for 3 or 4 months. But then you got 8 months, and then after those 8 months, guess what? That rent is going to go up. So we'll have to keep chiming in on and looking at the housing market a little bit closer. But there's one more article we're going to talk about, and we're going to talk about how people are feeling as far as just in general, as far as the housing crisis and what people are predicting. Will there be a market crash? And this is what we're going to discuss in this particular video.
Reported on pending home sales, which can often be seen as a leading indicator, the level at a record low, so worse during the financial crisis and the housing crisis. How bad is it out there for housing?
Bad. The housing market's in a deep freeze when it comes to home sales and origination volume. You got a fixed mortgage rate. I saw Diana's number, 6.8%. The average coupon on an existing mortgage, so you look at all the mortgage debt outstanding, look at the average interest rate, it's 4%. So, think about the economics of that for a homeowner. It just doesn't make any sense to sell your home, extinguish your mortgage at 4%, go buy another home and get a mortgage at 6.8. It just doesn't work economically. So even though inventories are up, they're very, very low by historical standards. And so there's, until we see mortgage rates come in closer to 6 and even into the 5s, I just don't think this market's going to come back to life to any significant degree.
I mean, they should come in a little bit. We've seen a big move in the 10-year yield just in the last few weeks, even in the last week or so. Mark, that could be helpful. We know this administration is looking carefully and targeting the 10-year yield. The Treasury Secretary has said that. What do you ascribe to the lower Treasury yields? Do you think this growth scare is for real?
Yeah, it's real. I don't know how you target the 10-year Treasury yield. Good luck with that. It's got a mind of its own. Global investors determine the 10-year yield. And, of course, mortgage rates are much higher than the 10-year yield because of volatility of interest rates. Interest rates are jumping up and down all around, and that makes the value of the prepayment option in the mortgage greater, and thus, the rate is much higher. So Sarah, I wouldn't count on the mortgage rate coming in much as a result. But the decline in the 10-year yield and now the inversion of the yield curve again, 10-year yield is, last I looked, below the 3-month and 2-year, is growth. The economy is starting to gag on all the uncertainty that's coming out of policy being made in Washington, D.C., everything from the tariffs to the haphazard cuts to government employment. And we've got the potential for a government shutdown in a couple of weeks. And then, of course, there's the Treasury debt limit. I mean, there's just so much uncertainty. And, of course, that's got the Fed on hold. The Fed's told us point blank they're not going to do anything until they get some clarity around economic policy. And I think businesses and consumers are starting to say the same thing, with all this uncertainty. I may not pull back. I may not cut jobs. I may not cut my spending. But I'm certainly going to be much more cautious in all those things going forward. And it's reflected in the data. One more data point, given today's data. GDP in the first quarter is tracking now close to 1%. So we grew 3% last year almost. In the fourth quarter of last year, we grew over 2% annualized. And now we're tracking 1% in the first quarter. So that gives you a clear sense of the trajectory here.
Yeah. Well, Mark, I have to say, you did warn us. I remember when there was all this excitement after the Trump win about animal spirits and deregulation and taxes. You said the tariff uncertainty could start to weigh. I guess is that the number one economic risk?
I think it's all of the above. I think it's got people nervous, but the tariffs is clearly for business people. I think they're having a hard time with it, right? I mean, it's which countries, how high, which products, over what period of time. And the thing is, these tariff changes aren't done legislatively. This is done by executive order. So it can change in an instant. The president can decide one thing or the other and execute on that. And I think business people see that. I'm a business person. I make investments, and when I think of an investment, it's pretty simple. I open up a spreadsheet. I put in the revenues I expect. I look at the expenses that I'm going to incur. I calculate a return. I compare that to my cost of capital. But every cell in that spreadsheet, you got to fill it in. Otherwise, you can't calculate your return.
Yeah.
And I think businesses are having a hard time filling in that spreadsheet.
Figuring that out. Yeah, Mark, thank you for joining us. Always good to talk to you, Mark Zandi from Moody's Analytics.
All right, so I just want you to see what he was stating as far as, will there be a housing crisis as far as the mortgages? Because, see, this is the thing. It's all about supply and demand. And we still have a shortage of homes. And so sellers are not trying to sell, which you can't blame them because a lot of the sellers got very good interest rates, So, people who sold, let's say, or bought their home, let's say about, 4 or 5 years ago, their rates are probably 3%, 4%, maybe even some in the high 2s, But now the mortgage rates are around almost 6.5%, almost 7%. So you're talking about going from a 3.5% to a 7% rate. They're going to hold on to their house. And not to mention, you're going to probably settle for a smaller home, because back in the day, even just 5-10 years ago, you could get a home, $250,000. It was a good size home. But now you have homes that are maybe 1,000 square feet, 1,200 square feet, and they're priced at that same amount of money. So that person that's got a 3,000 square foot home is not going to want to downsize and pay more on the interest rate and have a higher payment at that for a smaller house, And so that's where the issue is. It's just the supply and demand. It's just not a lot of people selling, which you can't blame them for that. I get offers in the mail all the time for people who want to buy my home. They want to buy. And I'm just like, no, because number one, I know I'm not going to be able to find in this type of market the size home for a good price in a very good area, that's close to my job. So it's not as far as me paying more. Now I could find one, but I'd be paying a whole lot more. And plus my interest rate is very good. So it will be very, very hard for me to do that. So we'll just have to keep an eye out on the housing market and the rental market as well, just to see kind of where everything is. I know last video we talked about the grocery spending and all that, but I kind of wanted to talk about the housing market tonight, just so that you can see where we are as a nation. Okay. But anyways, time to go ahead and shut it on down for tonight. Join me on Thursday. I'll be back at 8 o'clock. We're going to still talk about the economy. We're going to get into the stock market and see how well things are doing on that end of it. Because we have to cover all areas. We have to talk about the politics. We have to talk about Trump's tariffs and all that stuff. We have to talk about the food, and now we're talking about the housing. And that's a key indicator of how well we really are doing. Okay, so yes, join me on Thursday at 8 p.m. We're going to tackle that. And also we're going to tackle a few more things as far as what's to come later on in this year, which I'm not going to disclose until Thursday. So anyway, I hope everybody has enjoyed. If you enjoyed the content, please hit like, share, and subscribe. And also, if you can, hit the notification bell. That way you're always notified when I come on to YouTube. You won't miss no episodes, okay? All right, so I will see everybody at 8 o'clock on Thursday, and everyone have a great night. Take care. Bye-bye.